In this video, traders, we're going to look at how to draw support and resistance lines on candlestick charts. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so a quick video on how to draw support and resistance lines. If you don't know what support and resistance is, go and check out other videos I've done where I've talked about how we trade with support and resistance, the use and the value of it. But often people are asking this question of, hey, how do I draw a support level or resistance level on a candlestick chart? There's a real finite level. It's very difficult to gauge the exact position it should be. What's the correct method? So I'm going to share with you the method that I use that served me quite well. And I think this is a good way of doing it. So let's have a look. So we've got crude oil here on a daily chart. I'm going to minimize that now so that we've got more room to see what's going on. So crude oil, daily chart, your standard West Texas Intermediate crude oil. All right, so I've got a section of trade here, and you can see we've kind of been in a range, and it's the perfect environment to be drawing your support or resistance lines on. Now, how would I draw a support line? So I would look at this and say, okay, let's assume now I'm assessing this. We are right here. I'm going to draw a little line here. We are here. We're right now. We're seeing this, and we're assessing it for future trade going forward. Okay, so I'm going to look at this and I'm going to say, okay, I can see some obvious levels of support and resistance that pop out at me straight away. Now, the key thing here, guys, is to think of your support and resistance instead of lines at more like areas. So you can immediately see and say, hey, you know what? There's a massive level of support here. Okay, there's a second level of support down here from the prior breakthrough, and we've got a kind of little area of support here which is slightly higher, and that makes sense, right? Because we've got a cluster. Let's get the drawing pen out. We've got a cluster here to tag with this lower line, multiple tags, multiple tests, multiple levels, and then a little bit higher you can see we've kind of got this little few extra pauses before it got to that lower level. So to me, I'm looking at that saying, hey, you know what, this is an area. So what I would prefer to do is I would prefer to either draw two horizontal lines close together like this and say, you know what, that little area, and you can use a rectangle if you want. You can draw it with a rectangle. It's the same kind of thing. It does exactly the same thing. Where are we? Let's draw it with a rectangle. Where's my rectangle on here? Here it is. We can do this and we can say, yep, there's my area, and it's a kind of fuzzy area of support and resistance. That to me is more sensible with what the market is telling you. Market is telling you when it hits resistances that, hey, this is the level where supply demand has shifted, sellers have shut off, buyers have been interested, and we've rotated back upwards. And this is a reasonable area. Now, and this happens to be, what is it, 70, 82 cent area. So it wouldn't make any sense to go relatively early on with that and have a very tight stop, because ultimately there's still some support down here. So you've got to look at this and say, okay, there's my range of support. It's a zone, it's an area. I'm going to trade. I'm going to come up with a trading plan and strategy based around that area. Similarly, if we look at the high side, we've got a resistance level here. And listen, candlesticks are going to show us the highs have pushed through. So if we were just looking at the closes, we'd probably have it here. If we're looking at candlestick, we're going to be here. Again, it's a kind of thing where we need this area. We need to say to ourselves, listen, there's an area, a cluster of resistance there. We don't really want this one. We want to say, hey, there's a cluster of resistance there. Maybe there's more finite resistance here because I can see 1, 2 exclusive highs, 3 actual high tags. But now I've kind of framed this in a better way. Because I've got the candlestick chart and I've got those wicks, I've got those tails, I can see the intraday high as opposed to just a closing print on the line chart. Yes, we're going to get those excursions through, but to me they're a very useful kind of benchmarking thing to look at. I can see here multiple wicks. If we zoom in on this as well, guys, we'll zoom in here so we can see what's going on. I can see multiple kind of wicks. Let me bring that down a bit. Multiple wicks to the high side indicating a change in sentiment intraday, which to me is even more powerful. I know that this level, this $54 to $55 level, is a big $1 level that I need to be interested in. Whether I'm closing my longs when I get to there, whether I'm initiating a short, whether I'm looking for a breakout, it doesn't matter. This video is not about the strategy based around it. This video is about how we draw those levels. When we're looking at candlestick chart, we can see dirty wicks and kind of tails, and the bodies are a bit grubby. It's to think of it as an area, because otherwise we kind of look at this and say, look at the difference. If we come in and say, okay, well, that's a finite level of resistance there, ultimately, price has gone multiple times, like 1, 2, 3, 4, 5, or 10 times almost kind of 80 cents or 40 cents to 80 cents above that. And that's important to know, because if we're selling literally at some resistance there and we're using a 50-cent stop, the chance of it actually being tagged are quite high. We're going to get stopped out. The chances are quite high because it's gone through multiple times. Whereas if we look at it as an area, maybe we initiate a position here. Maybe we say, you know what, I want to wait for an extreme. We can frame the trade a bit differently. Same to the downside. We can look at the area of support as opposed to the finite level of support and use that as a zone to work orders around, whether we scale in, as I say, scaling orders like at the beginning all the way through until the end, or whether we wait right until the end of support. But we can frame things differently, and we don't end up getting surprised when we get stopped out. We can kind of look at it. And the most important thing that I want to mention, guys, is that, hey, when you're looking at support and resistance, it's just an area that you're considering doing business in. That's it. There's no definite answer that's going to reverse there. It's not definitely going to break through there. It's just areas previously where buyers and sellers have disagreed a little bit more, and we found an inflection point. It's an area of interest to others, so by default, it should be an area of interest to us. And that's the key thing, an area. So when using candlesticks, guys, and with bars, consider using an area strip as opposed to a definitive line, and that might help you kind of see the trade better, frame the trade better, and think in terms of probabilities and potential turning points as opposed to definite brick walls that we tend to kind of think about when we're drawing an actual line. All right, guys, take care, keep your risk managed. See you in the next one. Bye bye.